We are Thesis Gold and Silver. We recently rebranded. We used to be Thesis Gold. And I'm going to make some forward-looking statements, so you can read these at your leisure. So we have the Lawyers Ranch project in the Tudogan district. I don't think I need to explain too much where it is. So this is a recognized mining jurisdiction, and we have 485 square kilometer land position. We already have a large gold and silver mineral resource. Last year, we published a PFS. It's based on 4.6 million ounces gold equivalent in the measured and indicated category. And this includes 97, so almost 98 million ounces of silver, which is very important. It's a really sizable silver project. There's good infrastructure in place in the district. The project has very strong economics. It's really robust. We have low capital intensity, low operating costs, and it does have high returns and a very rapid payback. There's significant exploration upside in our land holdings and in the district as well. And we do have very strong support from the First Nations, and I'm going to talk about it a little bit later. So talking about the existing infrastructure, the project is accessible by road year-round from Prince George. There's also the sturdy airstrip, which is just 10 kilometers from where we are, and it provides access by air from Vancouver and also from regional airports. We're only 45 kilometers northwest of the Kemess mine, where we can tie into the grid, and it's green energy. It's hydroelectric energy. And we do have a very favorable topography, which makes it logistically easy to operate. 2025 was a really good year for us. We hit several very important milestones. I'm going to talk about a few of them. In April, we welcomed Centerra. They took a 9.9% position in our company. They are the owners and operators of the Kemess mine. We also commenced a very good, a 10,000 meter exploration program, and we had some really impressive results. I'm going to talk about them a little bit later. We published the results of a PFS in December of last year, and we also welcomed 3 First Nations as equity shareholders. And finally, we commenced the EA program, the EA process at both the provincial and the federal level. So it was a very good year, and actually that was reflected in our share price. We actually performed in the top 50 TSX-V stocks last year. And our returns were 284% in 2025. So it was actually a very good year for us. 2026 has started very well for us as well. We just announced yesterday that AngloGold took a 5% position in our company as well. So we're off to a good start. Talking about the PFS, as I said, this is a really strong PFS. We use very conservative prices at $2,900 per ounce of gold and $35 per ounce of silver. This project delivers really robust NPV of $2.4 billion. This is Canadian. This is after tax. The IRR is 54.4%, and the payback is only 1.9. And it's important to mention that this is at a very modest initial capex of just $740 million. Again, this is Canadian. This is a 15-year mine life. It's going to be an open pit and underground mine. And the all-in sustaining costs are actually quite modest at $1,185 per gold equivalent ounce. This is at the base case, which is very conservative considering today's prices. If we look at the sensitivity table and we look at the upside case, which is much closer to today's prices, you can see what this project does. So you can see that the after-tax NPV goes to $6.6 billion Canadian. The IRR goes to over 118%, and the project is paid back in 0.5 years. So this is quite impressive. And it also generate significant free cash flow. At the base case, $3.8 billion, that's after tax, and the upside case, $10.2 billion. So I'm going to talk about the Ranch exploration upside because Lawyers is quite well understood. We have drilled quite a lot, and 4 million of the 4.6 million gold equivalent ounces that we have in the resource are hosted at Lawyers. But Ranch only has 600,000 ounces of gold equivalent. This is an area that is largely underexplored. And last year we had some very interesting results, which are not included in our current resource statement. So at Steve, we intersected 38 meters of 3.62 gram per ton. And this is an area that already hosts mineralization that we knew. And at Bingo, we also extended the mineralization 30 meters beyond the currently modeled mineralization. There are approximately 15 to 20 targets that we have identified that we're going to continue exploring this year. And this is an area where we see the hallmarks of a deeper porphyry system. So we will be returning this year, and we're going to explore several of those targets that we have identified. In terms of the permitting process, it's really positive to see some of our neighbors in the Tutugon and in BC receiving permits from the government. So I think that gives investors confidence in the jurisdiction. We started the EA process last year in December with the IPD submission. We are currently in the early engagement step of the process. Now, it's very important to mention here that we have the support of 3 of the 4 First Nations in our area. The Takla, Kwadacha, and Sekedene First Nations, they made an equity investment in our company last year. And we are developing the EA process in close collaboration with them. So we're doing this cooperating with the First Nations. They're very supportive. Since we started in the project, they have received approximately $50 million in contracts that have gone to First Nations-owned companies. So we work very closely with them. And we expect that an EA decision will be made in 2029. We expect to submit the draft EA in 2027. So we will continue moving the process this year and until 2029. I'm going to talk about the silver lining. So as I mentioned, this project has approximately 100 million ounces of silver. And silver is going to be a very important component of the economics of this project. It's going to contribute approximately 23% of total revenues. That is at base case prices. At today's prices, it's probably closer to 30%. So the life of mine silver all-in sustaining costs are estimated at approximately $14.30 per ounce of silver. So again, this is a very important component. And it's also a source of project financing. It gives us the flexibility to look into streams or into offtake agreements to make sure that we keep dilution low as we move into project financing later on. It's going to produce, so Lawyers Ranch is going to produce 4.3 million ounces of silver in years 1 to 5. And life of mine is going to be about 3.5 million ounces of silver per year. So it's going to make it a significant contributor. And as you know, there's a scarcity of good quality silver projects in safe jurisdictions today. So that makes Lawyers Ranch really interesting. In terms of where we are today, we've had a great year, but we think we're still arguably more undervalued today than we were before because of the economics that I just spoke to. So the PFS has outlined a very robust project. So if you see where we're trading today compared to where our peers are, you can see that there's still a lot of runway. And we expect that as we continue moving the project forward and de-risking it, there's going to be a significant re-rate here. We have very strong shareholders. Approximately 70% of our shareholders are institutional. As I mentioned, AngloGold Ashanti just became a 5% shareholder. The First Nations are also shareholders of ours, and you can see some very strong hands there. They have been very long-term, very supportive shareholders of ours. Thank you very much.